Good evening, everyone, and thanks for tuning in. My name is Danielle Dussel. I'm the Executive Director of the Preservation Resource Center of New Orleans, and we're very excited to welcome you tonight to our evening class, Homeowners and Flood Insurance Basics. I want to thank Alyssa Barre Bourgeois for being with us tonight. Hi, Alyssa. Thanks so much for being here. I'm going to turn it over to Alyssa in just a few minutes. But before I do, I want to go over some basics about how this webinar will work. So in front of you is your Zoom screen, and on the bottom you see two functions for which you can communicate with us. The first is a chat function, and the second says Q&A. If you have questions for Alyssa that arise in your mind at any point during the webinar tonight, just type the question into the Q&A box, and I'll be moderating. And after Alyssa is done with her presentation, I will go ahead and ask those questions of her. If you have any technical questions about your Zoom account or any questions about the PRC, please send those in the chat and I'll try and moderate them as we go along. Just to remind you all, the Preservation Resource Center of New Orleans is a 46-year-old nonprofit dedicated to the preservation of New Orleans historic architecture, neighborhoods, and cultural identity. We put on free classes throughout the year. We've done oodles of classes since the lockdown in March, and we're so grateful for all of your support. Our work year-round is made possible through our donors and our members, and we're so grateful for all of you who do that important, generous work with us. Sorry, everyone, I'm joined tonight by my children, so it's going to be a little rocky. Okay, so just to remind you all what tonight's class is about, the annual cost of insurance is a major contributing factor in determining monthly expenses on a home purchase. A clear understanding of how homeowners insurance works is key in determining what level of coverage you will want or need. Flood insurance in Orleans Parish can vary substantially from one property to the next. This class will explain how flood zone maps were developed, how to read them, and what that means for your rates. So now I'm going to introduce Alyssa. Alyssa Bourgeois is a New Orleans native who began her career in insurance with Eustis Insurance in 2012 upon graduating from LSU Business School. She's an agent specializing in personal lines insurance, which includes homeowners, flood, auto, jewelry, and renovation insurance. Alyssa lives in River Ridge with her husband, Blake, 2-year-old Brady, and 6-week-old Bryce. My gosh, Alyssa, you're a superwoman. Thanks so much for joining us. And so soon after giving birth, you're amazing. Thanks so much for being here tonight. I'll go ahead and turn it over to you. You are muted, so make sure to unmute your mic and we'll get started.
Can you hear me now? Okay, perfect. Let me share my screen and then I will be ready to go. Okay, and can you guys see on the screen here what we're looking at?
Perfect.
Okay, perfect. Well, thank you for having me. Yes, I do have a 6-week-old, but honestly, this is a really nice break. I have been on maternity leave, so if at any point this seems a little bit rusty, it has been a couple of weeks since I've taken a look at all of this, but please don't hesitate to ask questions at the end. I'm going to do my best to make sure this is as detailed as possible. It's really hard to kind of get into the major specifics of flood insurance, especially. It can be really overwhelming. There's a lot to take in on that. So I'm going to do my best to kind of give a 1,000-foot view, and then definitely please ask questions if anything is unclear or you'd like to hear more about it. So that being said, what we're going to do is start off with a homeowner's policy. We'll go through that for about the first half, and then we'll go through flood insurance. So one thing that I always like to point out to my clients is, sometimes when you're dealing with the home buying process, of course, expenses are a huge issue. A lot of times when a client gets to the insurance part, we are the last ones on the line. They may have even been under contract on 2 or 3 houses, so they've had inspections on several houses. They're dealing with a lender that has costs. They're dealing with title companies. They're dealing with, so many people involved in the transaction that a lot of times insurance is kind of the last thought and the last thing and just kind of what you need to get to closing. And a lot of people don't really have the energy to deal with it at that point, which I totally understand. But I like to do my best to make sure that our clients understand what they're purchasing, because as everyone is aware, within the last couple of weeks and months, we're having a really active hurricane season. And one thing that I think people don't really think about is the insurance is the only thing that is protecting your property once you close. So your realtor, your lender, your title company, these are all very transactional pieces of this puzzle. Your insurance is the only thing that's going to remain with you, as well as your agent throughout the years. So another thing to consider, you know, if you're shopping homeowners insurance and you're looking at a couple of different agents, most of us have access to the same carriers. It's just a matter of who you feel comfortable working with. So one thing that I always like to point out, a lot of times people will call and they say, hey, I need homeowners quotes. That's like walking into, you know, a Kia dealership and a Mercedes dealership and saying, how much is a car? It can be as much as you want it to be. You know, your insurance is going to do the same things. It's just a matter of what are the bells and whistles that you want on there. I never want to assume that a client doesn't want something, because most of the time a client's unaware of what's even available. So when I'm working with a client, I put all of the bells and whistles on a homeowner's policy, and I walk them through the quote just as I'm about to do with you now. So the first thing that I want you guys to take a look at is over here on the screen. This is what is a snapshot from an MLS listing. So this is going to be how we get a lot of our information when we're working on quotes for a buyer. A lot of times if you've lived in a home for a long period of time, you won't necessarily have access to information like this, but that snapshot is very helpful when we're dealing with a new home purchase. So here's a quote up on the screen now, and this is what I'm going to walk you guys through. This is an example of one of our carriers. So another thing to think about when you're working on a homeowner's insurance quote is there are a couple different types of insurance carriers and agents. I work for Eustis Insurance, which is part of Marsh & McLennan Agency, and we're an independent agency, meaning that we have access to many different homeowners carriers. So this is an example of one of our homeowners quotes. That's just a snapshot of what will be on here. If you were to call a company like State Farm or Liberty Mutual, they're considered a captive or a direct writer. They can only offer you their product. With an independent agent like I work for, it's essentially like you're walking into a mall and you can go to any store, but you're all in one place. So we're able to shop that coverage through many carriers, which is beneficial in our area in New Orleans, because a lot of carriers have not been writing homeowners coverage since Katrina. So this will give you several options with one agent rather than calling Liberty Mutual, calling State Farm, and calling any other carrier that may not even have access to provide something in today's market. That being said, what we're going to do first is take a look at this dwelling value over here on the left. So in determining this dwelling amount, this is the amount of coverage you have for that main structure. What we do is we take all of the details about the home. So that's going to be over here from this MLS sheet. Everything from the year the home was built, the living square footage, the quality of construction, is the kitchen custom, is it designer, is it builder's grade, what is the type of flooring, how many bathrooms are in the home, what are the quality of the bathrooms, is the home raised or on a slab. All of the factors about the home go into what's called a replacement cost estimator that's shown here. And this provides us with the cost to rebuild the home if we were to have a total loss. So it's really important to note that the purchase price is almost always very different from the dwelling value of the home. And that's because when you're talking purchase price, you're talking market value. As we all know, that can change dramatically. The housing market this past summer, and honestly since COVID, has been insane, the supply and demand. Housing prices are skyrocketing because there's low supply and high demand. Those purchase prices can change very drastically, whereas the replacement cost or the cost to rebuild the home remains pretty steady over the years with just a small increase for inflation. So one thing I'd like to point out about this specific example we're going to go over is the purchase price. In the top right corner here is $700,000 or the sale price. When we're talking about the replacement cost, all of the information that we input into this estimating software is coming out to tell us that it's only going to cost $423,000 to rebuild the structure. I know that's really hard for some people to understand when you're buying it for $700,000. how would it only cost $423 to rebuild? But a really great example that I like to use often is imagine a new construction home. If you have a builder who's building the same exact home on St. Charles Avenue, and they're building that home in Laplace as well, all of the same features, same floor plan, same everything, it's going to cost the same amount to rebuild both of those structures if they were to have a total loss. But obviously the home on St. Charles Avenue is going to sell for a lot more than the home in Laplace. So that's kind of hopefully that's a little bit easier for you to understand how land value can really impact that dwelling value. From an insurance standpoint, again, we're just looking at the cost to rebuild the structure. So once we have this dwelling limit of $423,000, the rest of these coverages will initially default as a percentage of that. So to the right, you're going to see the other structures limit here. Other structures is going to be anything that is permanently detached from the home itself. So things like a detached garage, a detached shed that's permanently tied to a foundation, a pool house, a swimming pool, anything that's detached by a roof line will fall under your other structures. Initially, a homeowner's policy is going to provide 10% of the dwelling value for the other structures. So that's where the $42,300 comes from. This can be completely customized. So if you only have a fence in your backyard, there's no reason that you'd need to keep that standard 10% of coverage. You could customize it to what you feel is you need for your specific location. To the right of that, you're going to see the personal property limit here. This initially defaults to 50% of your dwelling limit. This is for any movable property. So that's going to be anything from clothing, furniture, pots, pans, appliances that are not permanently affixed to the dwelling. So washers, dryers, if your refrigerator unplugs and you can move it around, it's not permanently built in. All of those things will fall under your personal property. A good example that we always used to use, in insurance class was if you were to take your home and flip it upside down like a dollhouse, anything that's going to fall out or shake loose is falling under your personal property limit. So you need to account for any movable property under there. A lot of times first-time home buyers will say that's entirely too much. I don't need that standard 50%. That's not a problem at all. And this is another one of those items that you can customize. So you can increase this if you need to. You can decrease this if you need to. This is not something that has to remain at 50%. Also important to talk to your agent about things like jewelry or fine art. If you do have items of that nature, you would want to consider specifically scheduling them on a homeowner's policy, which would entail just acquiring an appraisal and specifying if it's a wedding set, the cut, the clarity, all of the information about that diamond as well as the value. So let's say you have a $10,000 wedding set, that would be specifically scheduled and you would have an appraisal to back that up. You'd pay an additional premium for that, but at that point, you and the carrier both agree what the value is if that item is misplaced or stolen. And the reason I specifically mentioned jewelry and fine art is because those are the most susceptible to theft. So there are some sublimits that are built into a homeowner's policy. So if you were to have a break-in and they did steal a drawer full of jewelry, only $2,500 can be reimbursed on most homeowners policies, and a deductible applies. So in that case, you really don't have a lot of coverage. If you do have items that are of higher value, that's the type of thing you want to talk to an agent about specifically scheduling. So think of your personal property as all of your stuff inside of your house outside of your jewelry and fine art. To the right of that, you're going to see the loss of use limit here. This amount initially defaults to 20% of your dwelling value. This is the amount of coverage you would have to live elsewhere if your home were being repaired after a covered loss. So imagine everybody in Lake Charles right now that's displaced because they had major roof damage and water entered their home. Obviously, they cannot live there while the home's being repaired. In that particular case, they have up to 20% of their homeowner's coverage or whatever they've chosen to rent another home in the area or stay in the hotels, whatever it may be. This is another amount that can be customized. I don't recommend taking it below 20% of your dwelling value because also think of a situation like Lake Charles or us after Katrina. supply and demand. Right now it may only cost a couple $1,000s a month to rent a home in your neighborhood, but if a lot of homes have damage, the cost of rent will increase. That's going to be our loss of use coverage. To the right of that, you're going to see personal liability, which is per occurrence. We always quote at $300,000 as a minimum. Liability coverage is very inexpensive relative to dwelling, other structures, personal property, and loss of use. And that's just because of where we're located. We're on the coast, we're dealing with wind and hail, the dwelling, the other structures, personal property, a much higher chance we're going to have to use those coverages. They're going to cost a little bit more factoring into this premium than liability. Liability is going to cover any liability, any situation that happens on or off of your property. So a scenario where somebody may be injured, if there's a swimming pool in the backyard and somebody's injured, if they're even off your property. A good example would be if you're golfing and you hit a ball and it hits somebody down the golf course and they have injuries and they come to you with damages. Your liability policy or your liability from your home policy will follow you in that scenario. All of your attorney's fees to defend are included outside of that $300,000 limit. So good to know that your defense coverage is not eating into the $300,000. To the right of that, you're going to see medical payments, which is per person and per occurrence. Similar to liability, it's going to cover any injuries on the property, but it's good to know in this particular case that this is going to be considered a goodwill payment. So you don't necessarily have to be at fault or negligent for these to pay out. So a good example of this would be if somebody trips down your front porch steps, or if there's any small injury on your property, trips down your stairs, this medical payments will pay up to $5,000 per person per accident. That's just sort of in the hopes that it takes care of any small medical bills and that person doesn't come back, sue you, and dip into that liability limit with defense costs as well. That's going to be the very basic parts of the insurance policy. Now we're going to go into optional coverages. Optional coverages are going to differ a little bit with each carrier, but these are some pretty common optional coverages here. So the first one that you're going to see is going to be that additional amounts of insurance there. What this is going to do is it's going to provide 25% of coverage on top of the dwelling limit. So in this particular case, this person has up to $528,750 on the dwelling because it's going to be 25% on top of the $423,000. This is really important because, again, think of Lake Charles. In a situation like that where there's a ton of damage, the cost of building material and labor is going to increase pretty significantly just because of supply and demand. So in this particular scenario, you have an additional 25% of coverage on top of your dwelling limit. Very helpful, again, for widespread damage. Below that, you're going to see equipment breakdown coverage of $100,000. This is going to be for any sudden and accidental loss to any equipment servicing the home. So any mechanical failure, sudden and accidental, again, it's not going to cover any wear and tear. Nothing on your insurance policy will ever cover wear and tear. Everything always has to be a sudden accidental loss that's going to trigger it. So think if you have a situation where you're living in an older home and it's settling over time and there are cracks in the walls, that's never going to be something covered on a homeowner's policy because that's something that's happening over time. Homeowners, again, sudden and accidental. So in this case with equipment breakdown, it has to be sudden and accidental as well. This is going to be for the equipment servicing the home. So a good example would be your AC system. Let's say it's summertime, the system's, kind of overworked because it is so hot outside and a condenser coil cracks, which now you need to replace your entire unit or your condenser. That's something that would fall under your equipment breakdown coverage. Some policies, the wording will also include electrical arcing. So if you have a situation where you have a brownout or an electrical arcing that fries, pool equipment or theater equipment or alarm system equipment, that's another thing that would be covered under that equipment breakdown, depending on the policy wording and that carrier providing it. Below that, you're going to see water and sewer backup coverage of $25,000. This is going to provide coverage for any water and sewer backing up inside of the home. So think of a scenario where you have minor street flooding. This can happen sometimes when those cities' plumbing lines, those underground lines are submerged. It can cause a backup inside of the home. If you have an overflow of toilets or sinks or drains from that backup, that could damage flooring or sheetrock in the area. This is where you'd have $25,000 of coverage for that. We'll talk a little bit more about flood insurance later, but think of something that happens inside of your home that's not affecting other homes on the street. Below that, you're going to see service line coverage of $10,000. This is a fairly new coverage, and what this is going to do is provide up to $10,000 of coverage for any lines that are stemming from the city's main line to your house specifically. So think of underground gas lines, electric, any plumbing, any water, anything that's coming from the city's main line to your house. If you have damage to that line that you are responsible for repairing, your service line coverage will provide that up to $10,000 for you to make those repairs, or do things like underground tunneling to figure out the problem, but that's going to be in your portion of the service line. Below that, you're going to see identity fraud coverage of $25,000. This is not going to proactively monitor credit or identity fraud, but if you do have your identity stolen, it will provide up to $25,000 for you to go through that process of restoring it. So this could be something that you may have through a credit card or through a bank. If that's the case, you probably don't need it on the homeowner's policy, but it is a very inexpensive coverage to have. It's about $25 for the year. So I think it's smart to have that included. So again, that's another thing that we've got on here that's optional. And then the last optional coverage that you'll see here is called personal injury coverage. What this does is it broadens the liability coverage here of $3,000 to account for coverage like libel and slander. So a lot of times when I'm explaining this to a client, they say, like, that's something I definitely don't need. Go ahead and take it off. I do want to shed some light on this coverage. If you have teenagers or young families, anybody who's on a social media platform, New Orleans is extraordinarily litigious. And if anything, if there's any type of libel or slander, a child in your home says something about a child in somebody else's home, and then you have to pay for defense coverage because you're named in a lawsuit. This would afford you with defense coverage outside of that $300,000 limit, and it would also provide up to the $300,000 as well. So not something that we really had to think of, 15, 20 years ago, but now it is much more popular just because of social media. So those are optional coverages again, and these are all initially included in this premium when I'm working on quotes. But after we do a run through like this with the client, a lot of times they'll tell me things that they'd like to remove or reduce. Things like water backup, they don't have to be maxed out at $25,000. You may be able to take 5 or 10 or 15. So again, some things to consider if you're looking to work on this premium here to fit it within your budget. To the left of this, right here under this deductible section, you'll see that there are a couple different deductibles applied. So the first one that you're going to see is called a hurricane deductible. Oops, I'm sorry about that. First one is the hurricane deductible, which is 2% of coverage A. So that's 2% of the dwelling value of $423,000. That's where $8,460 comes from. Sometimes people are a little bit confused and they think that 2% is 2% of the loss amount. Always going to be the percentage of your dwelling value. So in this particular case, if there is a hurricane and the hurricane damages the home, this client is out of pocket $8,460 before the insurance policy is going to pick up. Also important with this particular carrier, they have what's called a calendar year deductible. Sometimes it's per occurrence with some companies, sometimes it's calendar year. Calendar year is more favorable because, again, I hate to keep using Lake Charles, but it's relevant to us at this point. If you have more than one hurricane that damages the home in a season, you only have to meet that $8,460 deductible one time in the season. If it's per occurrence, you're out of pocket that $8,460 every single time you have damage from a hurricane. So that's a very important question to ask your agent is it a per occurrence deductible for hurricane or is it calendar year? You definitely want calendar year. Other things you may see, instead of a hurricane deductible, you may have a named storm deductible, which is less favorable because this is going to apply every time you have a named storm versus a hurricane. Obviously, you know, we tend to have fewer hurricanes that make landfall than named storms. If it's named storm, you're going to pay, again, every single time something is named. Hurricanes only if you have a hurricane. Or the least favorable wind deductible is going to be wind and hail. And that's because not only are you worrying about that deductible during hurricane season, but we have wind and hail issues throughout the year. So even January through June, you could have a couple of wind and hail events, and you're out of pocket that higher deductible every single wind or hail event, including hurricane season. So most favorable, again, is you want that hurricane deductible, and you want it to be calendar year. In this particular case, because there is a hurricane deductible, if this client were to have a named storm, a tropical storm, or a random wind or hail event, those losses would fall under the all other perils deductible below, which in this case was quoted at $5,000. All other perils deductibles are going to be for anything other than a hurricane. So again, in her case here, wind or hail, named storm, fire, theft, lightning. On a standard homeowners policy, your homeowner's coverage is going to cover anything unless it's specifically excluded. So unless it's excluded, you've got coverage. Typical exclusions for a homeowner's policy are going to be wear and tear, intentional damage, damage from burn-in, pests, termites. Very important in New Orleans that you maintain your termite contract because you're never going to have damage from termites or coverage for damage from termites or any other bugs or rodents. Those are some typical exclusions. Again, if it's not excluded, you have coverage. The all other perils deductible would apply. And in case I haven't mentioned, some of the other deductible options for all other perils would be $1,000, $2,500. You could take it $10,000. The higher the deductible, the lower the annual premium, just because you're retaining more of that loss. A lot of times when we're dealing with higher value homes, those clients tend to take $10,000 deductibles because those premiums can be, significantly higher than a $423,000 home. Below the all other perils deductible, you'll see equipment breakdown and water and sewer backup deductibles of $500. Those are corresponding with those optional coverages on the right that we just discussed. Those tend to be smaller losses, so for that reason, they do have smaller deductibles that are applied. So again, that's going to be the general overview of the insurance policy. Once you walk through that and you kind of have an understanding, that's when you can say, okay, you know what? I'm fine without equipment breakdown. I'm comfortable not having identity fraud. I don't need personal injury. I only have a fence. Let me reduce my other structures. I am single, right out of college. I only have IKEA furniture. These are all things that I hear on a daily basis. So I only need $40,000 in personal property. Totally fine. It is up to you. Again, that's why I say it's like you're walking into Kia and you're walking into Mercedes and you say, how much is a car? Totally depends. So a lot of times when you're going through this process, if you're purchasing a new home and you're working with 3 insurance agents, again, a lot of the times we're all working with these same carriers. So these same rates are generating. It just depends on the coverage limit selected and those optional coverages as to what that premium will be. Another thing that's important when working on homeowners insurance quotes, there are a lot of other factors that will affect that premium aside from your coverage limits and optional coverages. So some of those factors are going to include the age of the home. Obviously, a newer home is going to cost less to insure than an older home. It is important when you do have an older home to have updates to electric, plumbing, heating, roof. Those are all things that are going to be considered when your homeowner's insurance quote is generated. Obviously, if these systems are newer or if the home was gutted, there are credits available, and that rate will be more favorable than if the home has not been updated. Roof age is huge. We are finding a huge issue right now with roof age, and that is because a lot of the roofs in the city were replaced right after Katrina, which is now 15 years ago. Many insurance companies do not want to write coverage on a home if a roof is over 15 years. That's really, really important because now we're right up on 15 years, and a lot of these companies are just straight up saying that the home is not eligible to be quoted because the roof is 15 years old. That makes it very, very hard for a buyer because then they're trying to negotiate with the seller to replace the roof. They're trying to go back and forth. They'll say, oh, well, it's a 25-year roof. We all know that they can tell us it's a 25 to 35-year roof. The roofs do not last that long here, and that's just because we live in such a hot, humid climate. The granules start to, come off of the roof, and there's wear and tear to that roof. For that reason, roof age plays a huge, huge factor in determining premium. Also, roof type. So one thing to note also, there's a difference between an asphalt shingle roof and an architectural shingle roof. Asphalt shingles, 3-tab shingles, are typically placed right next to one another. So you'll see the shingles butt up side by side. Those are the roofs that insurance carriers don't love because they have even less of a lifespan than architectural. A lot of times they'll say they're not going to quote a home that has over a 12-year asphalt shingle roof. Architectural shingle, more beneficial. Those shingles are overlapping. So you'll see they're typically a few variations of colors. If you have a gray roof, they may be a couple different grays, and they're all overlapping. Those are rated for higher wind than the 3-tab asphalt. So that's another question that your insurance agent should be asking, or they should be looking at photos to see, is it architectural shingle or is it asphalt shingle? Very big difference in rating. You can see up to a $500 difference for that. Other factors affecting roof shape. If your home has a gable roof, which is an it looks like an A shape. A lot of our older historic homes, shotgun homes, have this gable roof. That's less favorable than a hip roof. A hip roof slopes down on all 4 sides of the home, is better rated for wind protection. So there are wind credits available for hip roofs. That's, again, playing part in this premium here. Credit insurance score is a big thing as well. So you could have 2 buyers looking at the same exact house, and they could be selecting the same coverages. Their quote is going to vary based on their credit score and prior claims history. If they're a first-time home buyer, or if they own a prior home and they've made several claims, the type of claim is factored in there as well. Is it considered an act of God claim, where it's a weather claim that was uncontrollable? Or do you have 2 theft claims and a water damage claim because your ice maker overflowed? All of these things are factoring into that homeowner's insurance premium. So definitely something to keep in mind, because a lot of things that I hear all the time is, a realtor will call and say, hey, I have a buyer. They're looking to buy this house. What will the insurance premium be? I can somewhat give them a range just based on looking at the roof age, the home, was it gutted, things like that. But I'll always give sort of a broad range because I never know until I start quoting those factors we just discussed about a client's personal, insurance background, credit score, things like that. So definitely something to keep in mind as well. That is, I know that was quick, but that's going to be an overview of the homeowners policy. Hopefully that was helpful. I definitely encourage you, if your agent has never walked you through this, please reach out to them. Make sure it's specific to what you need. Again, things like your other structures, your personal property. Check to see if these endorsements are on there. A lot of times, again, when you're in this buying process, insurance is the last thing that you want to take a look at. Sometimes the lender even selects your insurance policy for you, which don't ever let them do that. You want to talk to that agent. You want to get to know what you have, because again, 3 years down the road, if something happens, you don't want your lender to have just plugged in a really small insurance cost just to get your loan to close. You want to know what you have. So again, we'll save the questions, I think, for the end after the flood insurance part, unless Danielle, unless you wanted to break it up. But otherwise, I'll touch a little bit on builder's risk insurance, and then we'll move right into flood.
That sounds great, Alyssa. Thank you.
Okay, no problem. So again, this is going to be your standard homeowner's policy when you are occupying the home as your primary residence. There are several types of policies for a house. You could have a dwelling policy, like a landlord policy, if you have a rental property. In that particular case, very similar. The coverages all mean the same thing, but you're going to customize it a little bit differently because you're not living there. So you may furnish it. You may have it unfurnished. That may differ a little bit for personal property. You're obviously not going to have things like identity fraud and that on a rental property. So keep that in mind as well. And then the third type of coverage you may have on a home is renovation insurance or builder's risk insurance. This is very important when you are purchasing a home. The agent needs to know if you're doing renovations or if you're moving in immediately. So the first thing I ask clients when we're looking at a house that they're purchasing is I say, are you going to be moving into the home within 30 days of your closing date? 30 days is that number that you think about because what happens is any insurance company will come out and at least do an exterior inspection of the home within the first 30 days. So if they come out to the home and they see that there's a dumpster outside and there are workers in and out of the house and they're ripping out siding or sheetrock, the first thing that they're going to do is come back to the agent and say, what's going on here? We're going to send a cancellation notice because we were told that this was an owner-occupied home. So keep that in mind. You want to make sure you're on a builder's risk policy, which is going to allow for people to be coming in and out of the home. It's going to provide the correct type of coverage for the dwelling itself. You're likely not going to have contents coverage insured on there because you're not going to have any personal property in there. If you're doing like a gut type renovation, you want to be sure you've got liability coverage because, again, if you've got people in and out and contractors, the chance of liability can be pretty significant. You want to make sure that all of that is included there as well. So again, very important if your agent does not ask you and they just assume that they're quoting as an owner-occupied home, that could be potentially very bad because you could come out and have a cancellation issued as soon as that carrier inspects, which means you'd go to closing, then you'd immediately get some sort of notice. Let me, hold on one second. Let me make sure something's up with my computer. Okay, sorry about that. Our internet was flickering. Okay. So again, yes, you want to make sure that you are quoting it on a builder's risk policy. If you're doing any type of renovations, you do not have to have a 12-month policy. So if renovations are only expected to take 6 weeks or 3 months or 6 months, you can take a 3-month or a 6-month or a 9-month policy. You just have to be sure the lender is okay with that. And if they know you're renovating and they're planning on doing a construction loan, that's very normal. And that's something that you can work through. So again, be sure it's a different type of policy. You want to make sure you've got the dwelling covered there and the liability. Those are the two biggest components. You're likely not going to have coverage for the personal property because you won't need it. You don't need loss of use because you're not living there. So that's a little bit about builder's risk coverage. That's going to bring us next to flood insurance. So as far as the typical homeowners exclusions go, one of them that I forgot to mention is going to be flood insurance. Flood is always excluded from your homeowner's policy, and that's because you have to purchase it back through an additional policy. Flood insurance is going to cover rising water. So think of a scenario, Katrina, where you have a levee breach, water is rising from the street and entering the home. If you have significant rainfall, water is gathering in the street, rising and entering the home. If Sewage and Water Board has an issue and there's a pipe bust, if water is gathering in the street, rising and enter the home, rising water is key. If you have a scenario where you come home one day and your washer machine is overflowed and your floors are ruined and your sheetrock is ruined, that's not going to fall under your flood policy. That will fall under the home insurance policy. Flood is strictly going to be that rising water. Again, another example, let's say you have significant wind damage, your roof rips off and it's raining inside of the home. That's going to be homeowners insurance policy because wind and hail is what caused that situation, is what caused that water to enter. So that's going to fall under your home policy. So again, flood policy here. Flood maps changed in Orleans Parish in 2016. With those changes came a lot of great things for Orleans Parish. We had a ton of improvement in most areas. A lot of homes were moved from standard flood zones to preferred flood zones, which was great. Even the ones that stayed in those special flood hazard areas, a lot of them, the base flood number improved. So immediately the home was higher than it needed to be and those rates dropped down. A lot of times when people are buying a house, they may call and they may say, hey, look, where can I buy a house that has an X flood zone? That is super hard to tell. So there's not one area of the city that I can say for sure, this is all X or this is all preferred. It's so spotty, which is why I wanted to bring up this flood map here. This was a client that I was working with not too long ago who was purchasing this house. And as you can see here, the flood map is extremely spotty. So the orange color is going to be that preferred flood zone that has the lower premium, where a lender is not going to require flood insurance, typically going to be in an X zone. The red area is a special flood hazard area, which in our area, New Orleans, typically you'll see A or AE zone for that. A lender will always require flood insurance if you're in an A or an AE zone. And so for that reason, this plays a huge contributing factor to somebody who's purchasing a home, not only just budgeting purposes for that flood insurance premium, but also knowing a lender's going to require it. Personally, I live in an X zone. I would never chance it and not have flood, even though my lender does not require it. But some people have a different comfort level than others. And again, that's the thing about insurance. You can tailor it specifically to what you need. It is not a big blanket of here is your home cost, here's your flood cost. A bunch of things you can do to update each of those premiums. So again, those map changes happened in 2016. A lot of times when people are purchasing a house too, and they're looking between 2 or 3 different homes to see, okay, which flood zone is which. I recommend always call an agent, get them to run an actual flood zone determination. Some people use the LSU ag maps as a guide. They're okay as a guide. Do not put all of your trust in an LSU ag map. So for example, if I'm buying a house and let's see this little greenhouse icon comes up over here, I'm pretty comfortable thinking, okay, it's in an X zone. But we're looking at a house here and you can tell, I mean, these are city blocks. They're not zoomed in. It's very hard to figure out what's what. And this particular example, when we run a flood insurance determination, it's going to tell us up here, what is the flood zone, when were the maps changed, what is the base flood elevation. So definitely get an agent to run that for you if it's something that's a factor in what you're purchasing. Another thing to think about is a lot of times people will say, okay, it's in an X zone, it's in an X zone. I want to be in an X zone. X zones are great. They mean that there is less of a chance of flooding per year, but a lot of people don't realize within an X zone, there's standard rates and then there are preferred rates. You want to be in an X preferred. That's going to give you that $516 premium where the lender's not going to require it. If you're in a standard X zone, that means that the home has had 2 or more flood claims within a 10-year period, regardless of ownership. So that home may have flooded in Katrina. Someone sells the home, there's a new buyer, and then 4 years later it flooded again and they make a flood claim. If they've made 2 flood claims within that 10-year period, again, regardless of ownership, it can never get back in that preferred program for $516. It has like a $2,200 flood insurance rate. So that is very, very, very important. If you're going to use the Ag Center as a reference for flood insurance maps, again, if you look over here, you're pretty comfortable thinking, okay, I'm in an X zone. If I'm in this orange area, if I'm over here, I'm not even going to remotely feel okay with thinking I'm in an X zone until someone verifies it. But the Ag map is not going to tell you if it's preferred or standard. So it's very important. You want to make sure a flood insurance agent begins that quote process. That is the only way you're going to find out if there's been prior flooding and if it's kicked out of that preferred program or if it's eligible for that $516 rate. So a very big misconception that we see a lot with flood insurance. I would say 9 out of the 10 houses that we pull that are in X zones are in the preferred X and they're $516. 1 out of 10 is in that standard. And a lot of times people have no idea when they go to purchase it. So that can definitely kill a deal if you're thinking I'm paying $516 annually and that flood insurance premium comes to $2,200. I mean, that could be huge. So another thing to think about with flood insurance, so everything with flood, unlike homeowners, where you're dealing with certain characteristics about the buyer that are also influencing the cost. Flood is all run through FEMA, through the government, so those rates are set in stone. The only factors that are changing those flood insurance rates are going to be the amount of coverage you select and the deductibles. So I have an example here. Let's see. Let me pull up a flood quote for you so that you can see what, okay. So here is a sample flood quote. What you're looking at here is maximum coverage limit. The most coverage you can have on a dwelling is $250,000, and the most that you can have on your contents is $100,000. If you need additional coverage, because let's say in our example previously, she has a $423,000 dwelling, you can look to an excess flood market where you can purchase additional flood insurance on top of the $250,000 building and on top of the $100,000 limit. A lender will never require more than $250 on the building and $100 on your, well, they're not going to require contents coverage, but they'll never require more than $250,000 on your building. It's just a personal preference if you'd like to buy excess flood insurance. So again, think of a scenario, Katrina, if you have a $423,000 dwelling limit and you've got water up to your rooftop, $250,000 is not going to cover it. So a lot of people do tend to purchase excess flood insurance. Just depends on their comfort level again. Are they near like Pontchartrain and they're maybe worried about storm surge? Did they have a bad experience in Katrina? Totally up to you, but that will factor in. This is again the standard NFIP policy: $250,000 in the building, $100,000 in content. The only way to change this premium is going to be this deductible limit here. So in this particular case, this house is sitting below the base flood elevation. It's in an area where there's an enclosed basement. That basement was enclosed without a permit years down the road, and for that reason, the flood insurance is extraordinarily high because it's basically saying this home will flood by at least 2 feet if the city begins to fill with water. That is why the rate is so high. So in this particular case, these coverage limits here, this is the highest $10,000 deductible. Here's the corresponding premium. Page 3 of the flood insurance quote is going to show you different building deductible amounts, different content deductible amounts, and their corresponding premiums. So you can see this premium changes from $51.44 down to $31.82. If you were to take the lower deductibles, you have the higher premium. The $10,000 deductibles warrant the lower premium. So again, this is going to be in one of those special flood hazard areas for a home that is negatively elevated. One thing to think about too, if you're in an A or an AE zone, the way that an agent determines this premium is by using an elevation certificate. This is specific to your property. So another question I get a lot is people are purchasing a home and they say, hey, I don't have an elevation certificate. What will the flood insurance premium be in this AE zone? Well, we have to have the elevation certificate to figure that out. Then they might say, okay, well, the neighbor is paying $800. So don't ever go with the neighbor is paying this because so many factors influence that premium. For example, you're going to see the building diagram here. This particular house is on a slab. If this were a 5, it would be raised without some sort of enclosure. So this is factoring in. This is showing you what the base flood zone is in the area. So if this base flood zone is a -4, that house needs to be at a -4 or higher. Really confusing in New Orleans because we're below sea level and these are negative numbers. But in this particular case, their living floor is at a -2.9. So again, negative numbers, really confusing, but let's say -4 is where they need to be. They're at a -2.9. They're almost a foot higher than they need to be. So their flood insurance premium is going to be more affordable than someone who maybe is right at the base flood elevation or below the base flood elevation. So again, this elevation certificate is going to be what determines that actuarial rate. And that's what's needed when you're looking at a house and you're trying to figure out what that flood insurance will be. One more thing about the elevation certificate is if you're purchasing that house and you don't want to buy it because you don't know if you're going to get under contract, but nobody has it, nobody can find it, taking a look at that seller's current flood insurance declarations page, that could give us some insight, because they may have purchased an elevation certificate 10 or 12 years ago. That policy may already be rated with one, and you can just take over that policy and maintain that rate. So working with an agent who's able to differentiate that, they can give you some guidance, they can save you some money on purchasing a new certificate, or they can say, hey, look, this house is 2 feet below, walk away, because that flood insurance premium is going to be unaffordable. So again, I know that was a lot of information. Flood insurance is very overwhelming. I just try to give you a little bit of an overview, but please, if you have specific questions or something was not clear, feel free to ask me, and I'll go into some more detail on that. So Danielle, just let me know if any questions have come in, or if anything needs to be clarified, and we can kind of go from there.
Okay, great. Thank you, Alyssa. That was so much information. That was really, really fantastic. So thank you for going through all of that. For those of you who are watching, please send in your specific questions for Alyssa. Click the Q&A button and type in your question in the box, and I will relay those questions to Alyssa. And I'll give you a minute to do that while I'm waiting. I just want to thank some of our sponsors for making tonight possible: the Hellis Foundation, the 1772 Foundation, the Klein Lehman Esperanza Trust, and the National Trust for Historic Preservation. So thank you to our major sponsors. I also want to encourage those of you who are watching at home, if you're not already a member of the Preservation Resource Center, I encourage you to join. You can do so at our website, prcno.org. Membership starts at just $50 a year, and you get all sorts of wonderful perks, including our monthly magazine, which is award-winning, Preservation in Print, delivered right to your home every month, with lots of great articles and information. You also get discounts on merchandise and tickets, and our merchandise is totally phenomenal. So while you're at prcno.org, don't forget to shop. We have books, masks, tote bags, really fun t-shirts, great for your holiday gift shopping, which apparently is starting today thanks to Amazon Prime Day. So go to our website, prcno.org, to do your shopping and become a member today. Okay, Alyssa, we only have a few questions, so I'll just go ahead and relay those to you. Dee asks, is there any difference for a 30-year roof versus a 50-year roof? And she says that they are past the 15-year mark for their roof.
So good question. You're only going to hear the term 30-year roof or 50-year roof from a roofer. When dealing with homeowners insurance, the roof age and architectural or asphalt or slate or metal, those are the only characteristics that are applicable. So if you are past a 15-year roof, I would recommend not changing homeowners insurance carriers, because you're going to have a hard time finding anybody willing to, come in and write a roof over 15 years old. A lot of carriers are okay with accepting a roofer statement. So if the roof is still in great condition, although it is 15 years old, and you are interested in switching insurance companies, depending on the carrier, they may be willing to accept a roofer statement along with photos stating that there's at least 10 years of remaining life left. And those are things that can go through underwriting. But honestly, if you have a roof over 15 years, just the rating factor itself, when you input 2002 for the roof year, is going to make that premium pretty unfavorable.
Okay, thank you. Chris asks, how or when are major appliances covered?
So good question. Let's say you've got appliances in your house, a commercial range and a commercial refrigerator, anything like that, washer, dryer, any of your appliances. If they are permanently affixed to the dwelling, like in my house, I have a trim kit that's permanently affixing my refrigerator to my wall. It's part of my wall. That's falling under my dwelling. My range can be plugged in and out and moved around. That's falling under my personal property limit. So let's say that I have a house fire. If both of my refrigerator and my range are damaged, along with my flooring, my sheetrock, it's just going to fall under either limit, whether it's under the dwelling or the personal property. You're still going to have coverage for fire, lightning, theft, all of those major wind, hail situations like that. It really just depends whether it's built into the house, it will fall under the dwelling, or if it's under your personal property, because it's a movable property.
Got it. That makes
Hopefully
great
that
sense.
answers the question.
Yeah. Another question from Rachel. They ask, I've recently added solar panels to my home. Can these be and should they be insured?
Yes, absolutely. So very important that you talk to your insurance agent, because a lot of insurance carriers are not going to insure those solar panels. They should be considered part of your dwelling. So when you're calculating that replacement cost, that dwelling value, those solar panels need to be included in that. So your dwelling value will be higher than if you did not have them, because they're permanently affixed to your roof. But you do want to be sure that your homeowner's carrier is going to accept them, because they're most likely going to be damaged in a wind or hail type scenario. If your policy excludes that or will not write that altogether, you could be out of pocket for a lot if you have damage for that system.
Wow. Okay, that's great to know. Melanie asks, where can we find the most updated flood maps? I'd love to know true flood zones as I'm searching for a home.
So the Ag Center, as I mentioned, if you just Google like LSU Ag Center flood maps, that's a great resource. That's what I was talking about earlier. Again, you know, if it's clearly in an X zone, then I'm okay telling you that. If it was a spotty one like we showed, definitely reach out to an insurance agent. Danielle probably has my contact info. You can always email me. You know, you can email me 6 houses. I'll run a flood zone determination on every single one of them for you, because I just want to be sure that it takes me 2 seconds and it can really factor where you're buying or what you're purchasing. So be sure that, you know, if it's just a quick search you want to do, Google LSU Ag Center flood map. But again, if it's coming up as X zone, don't just assume it's going to be the $516 premium. You want to have an agent start that quote, because it will tell you immediately if it's not eligible because of prior flooding. So again, that could mean a $2,200 X premium or a $516. So use the ag maps. It's just kind of a guideline. Maybe you're just taking a look at the neighborhood. But if you are serious about a house or putting in an offer, don't ever hesitate to email me again. I'll run that flood zone for you, and I can tell you if it's X or standard in a matter of just a couple of minutes.
Thanks, Alyssa. That's so nice of you. My colleague Danielle put your contact information in the chat box. So for those of you who are interested in contacting Alyssa, just click the chat box and you'll see her email right there. Theodore asks, what other flood zone types are there other than X? Do you want to talk just a little bit about that?
Yeah, good question. As far as the preferred flood zones, B, C, and X are grouped together. That's where you want to be if you're purchasing a house in a B, C, or X. That's going to be the $516 flood premium, or if they have the prior flooding, they get kicked into the standard. You're going to see B and C more on the North Shore. They mean the same thing. B, C, and X are good. A, AE, V, VE, those are the special flood hazard areas. Those are the zones, and typically in New Orleans, you're just going to see A and AE. If you see A or AE, that means elevation certificate's going to be needed for that actuarial premium, and that also means the lender's going to require flood insurance. It also means the premium will be higher than $600. That's where those rates tend to start, and that's if the home is, 4 feet above where it needs to be. I'd say the average A or AE premium is somewhere around, $1,200 to $2,000, again, depending on where the home sits. And the only way to tell that is by the elevation certificate that's specific to the property.
Great, that's so helpful. One last question related to the question before about appliances. Someone asks, is a dishwasher permanent to the house?
Yes, so in most scenarios, your dishwasher is permanently affixed to an island or to your cabinets or to your wall. If it can't just be, unplugged, my kind of guideline is, can it be unplugged and you can just move it? If that's the case, if it can be unplugged and you can move it around your whole house, it's going to fall under personal property. If it is stuck to that wall or that cabinet or in that island with a trim kit, it's permanently affixed, it's part of the dwelling value.
Got it. That's really good. Really good metric for people to remember. Well, amazingly, Alyssa, there are no more questions and we're exactly at 7 o'clock. I don't know if that's ever happened before. So I want to thank you again so much for your time tonight and for all this amazing information. It really taught all of us so much. So thank you, Alyssa.
No problem. Happy to help.
All right. Well, thanks everyone so much for tuning in tonight. I hope you'll join us again next week for our next class. Check out prcno.org for all lists of all of our upcoming classes, and have a wonderful evening. Thanks so much.
Thanks,
Bye-bye.
guys.